How's it going, everybody? Welcome back to another video. In this video we'll be going over the AMD model, how to break it down, and the theory behind it. And in this video we'll be breaking down every step of the AMD model. By the end of this video you'll have everything you'll need with examples to execute this model on a high consistent basis. So we can get straight into it, the introduction of the AMD model. The first step of this model is an accumulation. We're usually with an accumulation range high and an accumulation range low. The second step is a manipulation, where we manipulate the range low of the previous accumulation and engage into a higher time frame point of interest. And the third step of this model is the distribution, targeting the opposing side, the accumulation range high, and taking a change in the steady delivery to get us there for that confirmation. So we'll dig deeper into each step of the way, and we'll start off with the importance of accumulation. So why does accumulation actually occur? All accumulation is just smart money positioning themselves and easing into their position slowly, creating liquidity up here and creating liquidity down here. Another important thing of accumulation is when an accumulation happens on the lower time frame, it equals to higher time frame PD raise. So this lower time frame 15-minute accumulation equals to a higher time frame PD raise. Below the low of the accumulation range, a higher time frame for value gap is formed, and the higher time frame for value gap here is a 4-hour for value gap because that is our aligned lower time frame accumulation. Here's another example. We have a 5-minute accumulation right here. This is the accumulation low, and there's 12 5-minute candles that accumulate, and this on the higher time frame leads to a 1-hour for value gap being formed. So a core concept to understand is whenever we have an expansion then an accumulation, we're typically forming a sense of internal range of liquidity. So now we move on to the manipulation phase and understanding why the manipulation actually occurs. So taking the accumulation range low, we sweep that out as smart money starts to enter here. The manipulation phase has one objective only, and that's to clear liquidity before the true move begins. This allows institutions to build positions at better prices and to stop out all the retail traders and align ourselves with the smart money. And like I mentioned before, once we sweep out that accumulation range low, we simultaneously engage with the higher time frame PD array that was created. So we had this 5-minute accumulation. The next hourly candle opens up and we sweep out that accumulation range low, but we also tap into that higher time frame PD array. Now we can talk about the 2 steps needed in order for the distribution to actually occur. So the first step, of course, is an SMT on the manipulation wick that engage with the higher time frame PD array. So as you can clearly see, we have a nice internal SMT, giving us one out of the 2 concepts that we need in order for price to actually reverse. And the second concept that we need to reverse is a change in the steady delivery to confirm a shift in order flow. So with this SMT at the lows, we need a change in the steady delivery on the aligned time frame for price to actually continue pushing higher. And once we've seen these 2 concepts, we can automatically assume that the reversal conditions have been met and we can look to target the opposing side of liquidity. So we can go over the 10 AM model framework and what a day should look like for you. So first off, we can start off with the daily profile. You can clearly see that Asian session accumulates, London session manipulates into a higher time frame PD rate. It creates an SMT, and then this allows for the 10 AM model to have that second stage of distribution towards this drawn liquidity. So now on to the next slide. This is the 10 AM opening price. We accumulate, and by this accumulation, we create a higher time frame PD array. We see an SMT inside of this PD array for that manipulation, and then we get a change in the steady delivery, targeting the previous day high, which is our daily objective. Now to keep in mind, the 10 AM AMD model is a second stage of distribution, which makes it even higher probability than taking a trade during Asian session or London session. That's why this model works perfectly every single day. So now we can go into some examples of in-depth top-down analysis of the AMD model. But first, I want to give you one example at least going from the higher time frame all the way down to the lower time frame so we can see how this plays out. So first thing, what I see here, I see a daily change in the steady delivery right here on Monday. Monday taps into it. We get a strong significant closure, and Tuesday looks to expand. And we also have this previous monthly high that's a strong drawn liquidity and a price magnet. So now we can go down to the 4-hour chart and see what price did overnight and to see if there's anything we can look to target. So I do see a possible 4-hour for value gap right here, and we can mark out the previous daily range. Now we also left a failure swing to previous day high, which is a good target for a price to continue later on, and we can target this London liquidity. So because previous day high has not been swept, that would be my bias, and I'm looking for an accumulation, a manipulation, and a distribution, keeping in mind that we also have the previous monthly high resting above as well as this other daily external range of liquidity right here. So for me, it doesn't make sense for price to reverse especially after this reversal here on this time frame right here, and we just continue higher and higher from here. I'd ideally expect price to come back into possibly this 4-hour candle or this change in the standard delivery level to create an accumulation, manipulation, and to also create a new low of day, because Asian session did not create any significant manipulation or tapping into any higher time frame PDRA while it was manipulating. So we can expect this 4-hour candle to be the highest probability, especially because it's Tuesday. So we can look to see how the 4-hour candle plays out. So it looks like at the moment we're just accumulating, creating liquidity. You can clearly see we have these equal highs up here as well. And we still do not have any manipulation that's significant. So I'd expect price to at least come down into this change in the standard delivery level, or even this 4-hour fair value gap for our manipulation. So let's see if that actually happens. And yes, we do come down into this 4-hour fair value gap, or we barely tap into it, actually creating equal lows. But let's see if ES tapped into that gap. So in this case, ES actually swept out this low. Now we have an SMT with that gap, which is perfect. So we can go back to the Nasdaq, and now with that SMT in mind, with that higher time frame for value gap being engaged, all we can do is look for a lower time frame change in the standard delivery, and we can see how this actually plays out. So now with this manipulation being confirmed, we tap into that gap. We have an SMT at the lows. Now all I would need is a change in the standard delivery, which would be right here on the 3-minute chart or the 5-minute chart. So let's just wait for a candle body closure over here, and we can look to target price. We're also reacting off this 4-hour change in the standard delivery, which is also an extra confluence, and we can see how price continues, and we barely have any liquidity. We have a lot of liquidity resting up here. So let's see how this price actually plays out. So we get that closure right here. We can take our position, keep our stop loss at this protected low, and target either previous day high or that London liquidity. I'll target that previous day high right above that London liquidity, and we can see how this actually plays out, trading that 10 a.m. AMD model. And as you can see, everything aligned properly. This manipulation was valid, this accumulation was valid, and we get a beautiful change in the standard delivery, which price never came down below, and we hit previous day high, aligning ourselves with that daily bias. So we can go down to the higher time frame and see this as well. It makes complete sense, reacting off this change in the standard delivery level, reacting off that 4-hour fair value gap with SMT, and then targeting the failure swing that London left, right? Because we know whenever we leave a failure swing to a higher time frame drawn liquidity, that's just an engineered liquidity for price to target later. So this was an absolute beautiful trade, and we can move on to the next example. So now we can take another example here on gold and give you a little top-down analysis working on other assets. As you can clearly see, we're fundamentally bearish here. We're reacting off of bearish PD arrays and disrespecting these bullish PD arrays. So institutional order flow tells me that we might want to go down and take out this ERL, reacting off, this liquidity up here, and, targeting the accumulation range low on the higher time frame. So this would be my drawn liquidity because we go from ERL to IRL, right? And this is our IRL right here. So I have a bearish bias for today. So now we can go down to the lower time frame and see what Asian session and London session are doing. So now we're down to the lower time frame, and you can clearly see we're disrespecting bullish PD arrays and are respecting these bearish PD arrays. So we have an inversion of this bullish fair value gap, and we also have this external range of liquidity right here, and this swing point right here down below as well. So my drawn liquidity at this point would be this low right here, and the ERL resting below. So it looks like price just slowly accumulates higher, and we tap into this 4-hour fair value gap. Now I want to see how we react off this 4-hour fair value gap, and this might be the possible area of reversion if we are actually bullish or bearish, sorry. So we can go down to the 1-hour chart and see how price plays out. So we skip forward to 9:30 opening, and look what price does. We pretty much react off this 4-hour fair value gap. We get a nice hourly change in the delivery, which confirms that this is probably going to be the high of day. And we also have an SMT with silver, which I just checked. So this is a beautiful reversion, and this should be the high of day for this daily candle. So what's left? We're just looking to target this previous day high or previous day low, and targeting the external range of liquidity below. So now we can use our 10 a.m. AMD model to look to engage price on the 15-minute chart, and we can see how this plays out. So this 15-minute candle opens up. We pretty much do nothing. We have a short-term retracement right here at 9:30. and we can see if there's any PD rays that we can react off of. So we have a 30-minute gap up here that we wick off of, and we also have a 30-minute fair value gap right here that we see if we can see if we're reacting off of it. So we accumulate, we manipulate. If we get a significant candle body closure below this down close or this up close candle, this would constitute a nice beautiful short, and this pretty much aligns with the accumulation, the manipulation here, and then the distribution, right? See if we get that change in the steady delivery, it aligns with our daily bias because we know this is a confirmed high of day, right? So there's no point to trade up higher, right, when this is a confirmed high of day because there's no room. When this is the high of day, we're just going to continue lower based off narrative. So as soon as we get that change in the steady delivery here on the aligned time frame, so we get that, we can kind of play it back. So we get that change in the steady delivery. You can limit order and market order it. Keep our stop loss at this protected high or this protected high, and we can target this external range or this previous a low right here, and we can see how this actually plays out and see if we had distribution. And yep, this AMD model plays out perfectly, and the 4-hour candle creates this manipulation wick. We enter off that change in the day delivery confirmation, and we target the failure swing of a liquidity every single time. So this is a beautiful example here on gold, which aligns perfectly. We pretty much just accumulate, we manipulate right here around 6:30 to 7 a.m. for the daily candle. And like I said, the 10 a.m. AMD model is always going to be a second stage of distribution and gives you that second entry during the 9:30 and 10 a.m. New York AM session. So this is an absolutely amazing trade, and we can go down to the next example. So here we can take another look at this example right here, go through some top-down analysis of crude oil. I think this will be a very beautiful bullish example of showing you what the perfect day actually looks like. So pretty much we're here on Tuesday, right? And we have this previous weekly high resting here. We get a significant candle body closure of the previous range, right? And so I'm looking for price to continue expanding towards the previous weekly high. We have SMT at the lows, right? So I'd expect price to just continue higher with a smart distribution. So you can go down to the 4-hour chart and see how price actually moves. The first thing I actually want to see is how Asian session and London session play out. And so you can clearly see Asian session just accumulates. London session takes out the accumulation high, but then that's a fake. Say double purge, just engineering liquidity. And then we get a strong manipulation into this hourly fair value gap. And so at the lows, we do have an SMT here as well. And this should be the low of the daily candle, right? And we can continue higher. So at this point, with this change in the steady delivery confirmation right here at 7 a.m., we can expect price to push towards these swing highs, this swing high right here, and of course that previous weekly high as well. So pretty much I'm just going to skip forward to 9:30, and with this confirmation, this change in the steady delivery, we should see this be the low of day and continue moving on from there. So this is an absolute beautiful confirmation. We get a sweep of these liquidities, and we still have these liquidities resting here. And so you can clearly see at 9:30 we form this 1-hour fair value gap. So pretty much go down to the lower time frame and look for price to tap into this 1-hour fair value gap and possibly have that accumulation, manipulation, distribution. So the 10 a.m. candle opens up right here. We tap into that gap right away. We go back to the hourly chart and see. So we tap into that gap. And pretty much this is very, very clear here. This is like an 8+ example. We're just using that second stage distribution, right? Engaging with that higher time frame PD array and looking for price to accumulate, right? Then we manipulate into this higher time frame for value gap. And now all I'd be looking for is that SMT and that change in the state of delivery. So let me go look for that SMT. So in this case, we do have an SMT with DXY as they're inversely correlated. So DXY made a higher high while this made a higher low. So pretty much with that SMT, we tap in that 5-minute fair value gap. As you can clearly see, we have this nice change in the steady delivery right here. We're on the 5-minute, which is the aligned time frame for that 1-hour fair value gap. So we can pretty much just take our position off of here, keep our stop loss below this low, and we can target a nice 2R, and we can see how this actually plays out, accumulating, manipulating, and distributing, aligning ourselves with that daily bias and this daily candle. So we can see how this plays out. And as you can see, we get a beautiful distribution, aligning ourselves with that candle right on the hourly chart. Look at it. We have a beautiful tap into this gap, and we react off it perfectly. This is literally a picture perfect day. We have an accumulation, manipulation, distribution on the daily chart, confirming this to be the low of day with this external range of liquidity, right? Tapping into that hourly fair value gap, having that hourly change in the steady delivery, and then we continue higher, we sweep out this liquidity. We also have a second stage of distribution where, we accumulate, we manipulate into this 1 hour fair value gap, have an SMT with that extra range of liquidity, and then we continue higher. And with the point I was making, right, with this 1 hour fair value gap, we have a lot of 5-minute accumulation. So whenever we have a 5-minute accumulation after an expansion, we form a 1 hour fair value gap. Whenever we have a 15-minute accumulation after an expansion, we have a 4 hour fair value gap. Whenever we have an hourly accumulation after an expansion, we have a daily fair value gap. All of them are aligned, and that's how you pretty much anticipate fair value gaps to be formed and that accumulation, manipulation, distribution. So we can take another look at an example here on crude because it moves very, very nicely. So pretty much we have an accumulation on the higher time frame and then a manipulation, I think, into a weekly fair value gap or a weekly order block right here. This weekly order block area right here. And we sweep that out, sweep out previous weekly high, and I'd probably anticipate previous weekly low or this weekly external range of liquidity right here, and possibly this weekly fair value gap that's resting below both of them. So pretty much I go back down to the daily chart, and so my bias is already bearish, as you can clearly see. We have this nice daily fair value gap here, and we might want to target below this. So we can go down to the 4-hour chart and see how price played out. So you can clearly see we're disrespecting bullish PD arrays, a sign of institutional order flow, right? Flipping bearish, and we have a lot of drawn liquidity resting here. So at this point, I'd pretty much be looking for this external range of liquidity and just mark out the weekly or the daily range, and we can see how this plays out. So we have this 4-hour fair value gap here that London did not tap into, but I think we form an SMT here. Let's go on to the hourly chart and see what price did. So we do form an SMT here, right, with the DXY, and pretty much this is 5 a.m. so we can skip forward to 9:30. So fast forward to the 9 a.m. candle, we pretty much have this large range overnight. We have these 4-hour or 1 hour fair value gaps right here that I'm looking for price to engage with as a form of going from ERL to IRL. We sweep out this ERL, we go to IRL, and then from IRL to ERL following that market structure, right? So we can skip forward a little bit here to the 10 a.m. candle. This is the 9:45. We can go to the 10 a.m. candle and see. So we tap this 1 hour fair value gap here, and we have an accumulation. We manipulate. So pretty much at this point, I'd be curious to see if we do get that continuation. We do tap into that gap. So at this point, my change in the steady delivery level would be right here, right below that candle low, and we barely have any manipulation here on the low of the 4-hour candle. So this would be my change in the steady delivery level here. And as soon as we get a 5-minute candle body closure below that, we can look to take our trade. So this would actually be the new change in the steady delivery level, right? Because this is the liquidity that actually swept the other liquidity, right? So at this point, when you're looking at price action, right, and we manipulate into a 1 hour fair value gap, you have to take each swing point. So you can clearly see we made a newer high, right? So we take these series of candles that made the newer high, and that would be our change in the steady delivery level then, right? So we have our change in the steady delivery level. We would enter off the next candle or the candle body closure. We'd keep our stop loss here, and we target a 2R or just this liquidity resting below. And this looks like a very beautiful accumulation, manipulation, distribution, rebalancing, and then offering us that second stage of distribution. So let's see how this plays out. And we hit take profit right away, as I expected, because the 4-hour 10 a.m. AMD model is absolutely amazing for that second stage of distribution. And on days like this, I'm telling you guys, these are literally the absolute perfect days because this is offering a retracement because the daily candle's already reversed, right? So this is absolutely beautiful. We can move on to the next example. So we can take another look at this example right here, and this example will be here on the YM30, the Dow Jones, just to have some variety and show you that this model works on any asset. So pretty much what I see here, there's not really much to see here on the daily chart. We just see we have this nice rejection. We have a significant, rejection off here, and then, there's not a lot of stuff. So we sweep out this right here, and then we have a rejection. We close significantly lower, so we might want to continue lower, maybe to previous stay low, or even this weekly external swing point. You never know. So honestly, there's not a lot to say here on the daily chart, but we can look at the 4-hour chart and see if we have anything different. And what I can actually see here is we have this nice change in the delivery level that we're respecting off of, and we have a rejection. We also have that 4-hour value gap here as well. So, and we're disrespecting these bullish PD rays. So institutional order flow is always what I'm looking for on the higher time frame, right? If we're disrespecting bullish PD rays and respecting bearish PD rays, I'm gonna have a bearish bias. So at this point, from what I see here, right, this strong significant candle body closure, this rejection off this change in the delivery level and this 4-hour value gap, right? My drawn liquidity then becomes this previous day low. So what I see here is we have this 4-hour value gap that London does not tap into. I want to see if we have an SMT. Let's go to Nasdaq or ES if we have an SMT. ES does not have an SMT, but Nasdaq does. So you can clearly see Nasdaq sweeps out this Asian high, right? While YM does not. So pretty much we have an SMT here that can possibly confirm the high of day. So yeah, we have an SMT. Let's just mark this out. SMT. Right, so we get a significant candle body closure here, I think, on this 3M candle. Let's skip forward. And yeah, we get a significant candle body closure. Let's go to the 9 AM open and see how price plays out. And at this point, all I'd be looking for is we have an accumulation. We manipulate into the 4-hour value gap. All I'd be looking for is a change in the day delivery here. Or yeah, so let's see if this plays out. So at this point, we sweep this liquidity. Our change in the state delivery level would be right here, right? So let's see if we get that change in the state delivery here on the 15-minute, which is the aligned time frame. So we don't get it just yet, right? So we just continue being patient until that actually occurs, or it might just be wrong. So we finally get that change in the state delivery level. You can keep your SSD right here, and we would pretty much just enter off of here. We know we have that SMT at the highs. So the 10 AM kind of opens up, and we can go down to the lower time frame. We accumulate, right? We manipulate into this higher time frame. The value gap before, we have a manipulation creating this wick for that 4-hour candle. Right, the wick's a little bit higher, but we also tap into, I'm assuming, this area right here, right, which is also this 1-hour proportion block. And we also have this 1-hour value gap resting above that 4-hour value gap, so that's completely okay. So at this point, we get that 15-minute change in the day delivery. We take our position off of here and target, either the London lows, or you can just do a stagnant 2R. I'll target a 1.5R because this range is actually quite large. So we can see how this plays out, see if this model plays out nicely. And as you can clearly see, this model played out nicely with that SMT, that accumulation, manipulation, distribution of that daily candle. So at this point, I was wrong here, but that's why you wait to trade the second stage of distribution for that extra confirmation. So we accumulate, we manipulate, and then we distribute here on the 4-hour candle, which is another beautiful example here on YM. So for our last example of this model, we're going to be looking at silver here, and I hope you guys have learned something from this video, but pretty much we can go straight into the example. On the daily chart, we have a daily fair value gap that we, wick off of, and, we don't close inside of. So it tells me that we're respecting bullish PD arrays automatically. I just want to see how we play overnight. And we have this triple equal highs here, right, as a significant drawn liquidity, also going from IRL to ERL as well. So we can go down to the lower time frame, see how this plays out. So this is Monday, actually. We have to skip forward to the next day. And so this is the next day. We have a significant candle body closure here at 6 p.m., 10 p.m., and this is London session. So it looks like we tap into a 4-hour value gap during London, right? And we can just skip forward to 10 a.m. and we can see how this plays out. You can clearly see we have this change in this delivery here, but it's not a very strong one, right? There's a large wick here, and we completely retest it. So at this point, I just go to the lower time frame and be focused on trading only the 10 a.m. 4-hour candle. We might create a new low. We might sweep out this liquidity here and then, tap that 4-hour value gap again, right? So right now on the lower time frame, I just see a large accumulation with price not really doing much, right? So I just want to see the 10 a.m. candle opens up here. It just looks like we're accumulating. So ideally, I'd want to see probably an accumulation here, then a manipulation, tapping, sweeping out this London low, tapping that 4-hour value gap, and then continuing higher. So just see how price plays out. What do we do? It looks like we don't have any manipulation, right? So there's days like this. Honestly, this is a good example to show you, right? Where if there's no higher time frame PDR engaged and price is just moving choppy, there's no point to actually engage with this price action. So even though we get a change in the steady delivery here on the 1 p.m. candle, and this candle might just moonshot higher, right? Or it might not. This is a good example of what not to trade, right? So I'll show you an example of what not to trade. So we accumulate, right? We manipulate, but we don't tap into any hard time frame PD, right? We don't tap into any external range of liquidity, and we also do not have any SMT at the lows. So even though we have this change in the steady delivery, it failed so hard, right? Because there's no higher time frame PD, right? And honestly, this is an example I didn't even mean to pick out, right? But this is an example of, okay, the 10 EM power of 3 cannot work sometimes, right? And it's important to always have those 3 simple steps, right? That higher time frame PD, right? Some T, and that change in the steady delivery. So have all 3 steps, and you avoid losses like this. Even though we got a change in the steady delivery, even though we had an accumulation, because there's no higher time frame PD, right? Because there's no significant ERL, it didn't play out. So we'll just move on to the next example, and that's just an example of what you shouldn't do. So here we can take another look at an example here on gold, and so we can look at the AMD model. So pretty much the candle opens, we're significantly bullish here. I just expect price to continue higher. There's no real reason for us to continue lower or anything like that. So I'd go to the 4-hour chart and see if there's any points of interest we can look to engage with. So what I do here on a day like this is just mark out all the 4-hour fair value gaps and 1-hour fair value gaps in the expansion range, and I look for price to just retap into them and then continue higher. And as you can clearly see here as well, I go down to the hourly chart for a better view. The Asian session barely has any manipulation. So this is the high of day right now, and the Asian session did not manipulate into anything. So all I'd be looking for here is I'm expecting this just be a short-term level here. The New York session or the 10 AM candle creates a new low, and then we continue higher. So this is the 9 AM candle right here. We can look at so okay, this is exactly what price does, where we tap in that 4-hour value gap. We have a devil's mark here on the 4-hour candle at the moment. So this is a beautiful example, and this is a perfect example of what I wanted to show you guys. So at this point right here, we have the devil's mark. So there's no manipulation wick at all. So when we have a devil's mark on the 4-hour candle, this is the highest probability of the AMD model, right? So because there's no manipulation, and as we know, every single candle should have an accumulation, a manipulation, a distribution, and then a closure, right? And this just pretty much looks like this. So without that manipulation wick, we can assume that this will probably be the manipulation wick for that 4-hour candle because price did not do anything before. So devil's mark are the absolute best drawn liquidities. So we tap in that 4-hour for value gap. Now all I'd be looking for is, a 15-minute change in the steady delivery here, or if it's too high, which it is here in this case, it's all the way up here, I'd be looking for a lower time frame propulsion block, a secondary confirmation. So as you can clearly see, we get this change in the steady delivery here, but I would not take this because we need a 15-minute change in the steady delivery. So what I'd wait for is a retest of this change in the steady delivery. We continue higher, and then we have another change in the steady delivery / propulsion block, and that's what I'd enter off of. So we can clearly see, let's see if we do that, we retest, and this confirms the order flow. So let's see if we react off the change in the steady delivery level, and then I take a position off here. So this is our secondary change in the steady delivery level, which a lot of people do not teach you, right? But this secondary change in the steady delivery is right here. We take our position off of here, keep our stop loss at this protected low, and now we can target, this liquidity up here, and we can see how this plays out. And yeah, this you can clearly see this is flipping that 4-hour candle bullish. So let's see how this plays out. And as you can clearly see, before that candle closes, we get a beautiful distribution targeting this liquidity up here. And this is an example of the 10 AM candle creating the low of the day. We've seen that, London session creating the low of the day, and then Asian session creating the low of the day. This is where 10 AM candle actually creates the low of the day, where we see an accumulation, manipulation, and then distribution, right? And so we pretty much take that secondary change in the steady delivery level, which on the 15-minute chart is this right here. Made it to the end of the video. I have one final thing to show you. So pretty much this whole time I've been using my AMD model checklist right here on my second monitor. It goes through pretty much every single step of the accumulation manipulation model, and this is what I was using this whole video. So if you want access to this checklist, I'll give it to you for free because you watched till the end of the video. You can go to the link in bio and claim it for free just for the next 24 to 48 hours. So this goes through pretty much everything, and I use this on my second monitor while I trade every single day. So pretty much this is, I think, 7 examples or 6 examples of the 10 AM AMD model playing out and what I look for in different scenarios.